Hey everyone, welcome back to Corporate Decoder, the place where we decode those lengthy corporate reports to give you the juicy bits. In this video, we're diving into filings from Volatility Shares Trust, and let me tell you, this one is packed with financial details for a bunch of ETFs. So buckle up, because we will be looking at the 31st of August 2025 reports, and yes, there is a lot to unpack. And before we get into the nitty gritty, if you appreciate getting straight insights from these corporate documents, hit that subscribe button. We break down these filings so you don't have to. Also, join our Discord community linked in the description below, where we dive deeper into these topics and share exclusive insights. Alright, let's dive into what Volatility Shares Trust has been up to. We are looking at their semi-annual report for the period ending the 31st of August 2025. This report covers several of their exchange-traded funds, or ETFs. Think of an ETF as a basket of assets that trades on stock exchanges, kind of like a stock. This filing is a Form N-CSR, which is essentially a certified shareholder report for registered investment companies. It gives us a snapshot of the fund's performance fees and investment holdings. Let's start with a big one, the 2x Bitcoin Strategy ETF, or BITEX. This fund aims for daily returns that are 2 times the return of Bitcoin. Now, it is important to remember this is for a single day. This means over longer periods, the returns can be very different and not necessarily in a good way due to something called compounding. For a hypothetical $10,000 investment in BITEX, the costs for the last 6 months were $175. That is 2.91% of your investment. And that is annualized, by the way. Now for some serious numbers, as of the 31st of August 2025, the BITEX fund had a massive $2,231,000,000 in net assets. That is a lot of money tied into its strategy. And what does this fund invest in? Well, as of the 31st of August 2025, its holdings show 178.7% in CME Bitcoin futures for the 25th of September and 21.2% in CME Bitcoin futures for the 25th of October. This means they are heavily invested in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a future date. They also have a significant negative position in reverse repurchase agreements, which in simple terms is like them lending out cash to get it back with a little extra interest. But here it is used in a way that reduces their overall exposure. Moving on, we have the 2x Ether ETF, ticker ETHU. Similar to the BITEX fund, it aims for 2 times the daily return of Ether. For ETHU, the cost for a hypothetical $10,000 investment were $293, which translates to 3.29% annualized. This is a bit pricier than BITEX. This fund is also quite large, with net assets of $2,563,000,000 as of the same date. Its investments include 135% in CME Ether futures for the 25th of October and 64.9% in CME Ether futures for the 25th of September. Again, heavily invested in futures contracts and a large negative position in reverse repurchase agreements. Interestingly, they note that the management fee waiver expired in June 2025, meaning the management fee went up to 1.85%. Next up, the 2x Solana ETF, SALT. This one seeks twice the daily return of Solana, which is another cryptocurrency. Here, the cost for a $10,000 investment were $264, or a higher 4.55% annualized. This is one of the higher cost funds we're seeing. The net assets for SALT were $409 million also as of August 2025. It is invested in 200% in SOL futures for the 25th of September and a substantial negative 337.1% in reverse repurchase agreements. We also have the 2x XRP ETF, XRPT aiming for twice the daily return of XRP, another cryptocurrency. For XRPT, a $10,000 investment incurred costs of $104, or 3.50% annualized. This fund holds 200% in CME XRP futures for the 25th of September and a very large negative 433.5% in reverse repurchase agreements. This negative position is quite prominent across several of these funds. XRPT has net assets of $113 million. Now let's look at a couple of combined strategy ETFs. The one-way Nasdaq Negative 100 in Bitcoin ETF, UQB. This one aims for 100% of Nasdaq Negative 100 returns plus 100% of Bitcoin returns daily. UQB has costs of $54 for a $10,000 investment, making it 0.94% annualized, which is quite reasonable compared to the crypto-specific leveraged funds. Its holdings show 103.4% in Nasdaq Negative 100 Micro E Mini Futures for the 25th of September and 93.3% in CME CME Micro Bitcoin futures for the 25th of September, along with a negative 66.8% in reverse repurchase agreements. Similarly, the Wanione S&P 500 and Bitcoin ETF USB aims for 100% of the S&P 500 returns plus 100% of Bitcoin returns daily. USB has even lower costs at $51 for a $10,000 investment, or 0.88% annualized. Its investments include 110.9% in S&P 500 Micro E-mini futures for the 25th of September and 95.9% in CME Micro Bitcoin futures for the 25th of September, and a negative 54.3% in reverse repurchase agreements. Then we have the Solana ETF Sols. This appears to be a non-leveraged version compared to SOLT. For Sols, the costs were $110 for a $10,000 investment, or 1.99% annualized. It is invested in 100% in SOL futures for the 25th of September, and a negative 138.4% in reverse repurchase agreements. Next is the Volatility Premium Plus ETF, ZVOL. This fund is focused on volatility. ZVOL has cost of $64 for a $10,000 investment, or 1.35% annualized. Its investments include various CBOE VIX futures contracts, which are related to market volatility itself. Finally, we have the XRP ETF, XRPI. This is likely another non-leveraged version of the 2x XRP ETF. For XRPI, the costs were $54 or 1.82% annualized. It holds 100% in CME XRP futures for the 25th of September, and a negative 146.7% in reverse repurchase agreements. Now, looking at the aggregate financial statements, we see a lot of moving parts. For the 2x Bitcoin Strategy ETF, its total assets are over $8 billion, but its liabilities, primarily reverse repurchase agreements and variation margin on futures contracts, are over $6.3 billion. This highlights the significant use of leverage and derivatives. Interestingly, the net asset value per S-Hair for BitTEX is $50.96. This is a key metric for investors. The report also details various ratios. For BitTEX, the ratio of expenses to average net assets for the most recent period is 2.91%. This aligns with the annualized cost we saw earlier. Now, let's talk about the risks. The filing extensively discusses correlation and compounding risk. This is super important for leveraged and inverse ETFs. Like many of these, it means that the daily returns can be amplified, but this amplification works both ways over longer periods, especially in volatile markets. The actual return can be very different from what you might expect by simply multiplying the benchmark's return. The report emphasizes that these funds are not for everyone and require active management. They warn that a single day movement in the benchmark approaching 50% could result in a total loss of an investor's investment. That is a serious risk. Towards the end of the filing, there is a section about the Board of Trustees approving the continuation of the investment management agreement. This is a standard part of these reports, showing that the board reviewed the services provided by the investment advisor, Volatility Shares LLC. They specifically mention evaluating performance, fees, profitability, and economies of scale. They noted that the unitary fee rates for funds like BitTEX, Ethu, and ZVOL were in the fourth quartile compared to their peer groups, but justified this by explaining the unique complexities and risks associated with managing leveraged and inverse funds. The board's assessment of the nature, extent, and quality of services provided by the advisor included an evaluation of the investment performance of each fund. For BitTEX, Ethu, and ZVOL, they noted the advisor's explanations regarding limitations in the comparability of peer group data given each fund's unique investment objective. This is a common theme in these reviews where unique strategies make direct comparisons tricky. Looking at fees, the report details the unitary management fee structure where the advisor covers most expenses. For example, BitTEX, Ethu, and ZVOL have management fees of 1.85%, 1.85%, and 1.35% respectively. They acknowledge that these fees are on the higher side compared to peers, but justify it based on the specialized nature and risks involved with these products. The board also considered the advisor's profitability. They acknowledged that calculating this is complex, but concluded that the estimated profits were not unreasonable given the services provided. Essentially, they feel the advisor is being compensated fairly for the work they do managing these complex ETFs. So, what is the big picture here? Volatility Shares Trust manages a diverse set of ETFs, focusing heavily on leveraged and inverse exposure to cryptocurrencies, commodities, and volatility indexes. The filings highlight the significant assets under management for some of these funds. particularly BitX and Ethu. However, the report also underscores the inherent risks associated with leveraged and inverse strategies, especially compounding and correlation risk, which can lead to substantial losses for investors over periods longer than a single day. The management fees are on the higher side, but the board seems satisfied with the justification provided by the advisor, citing the complexity and specialized nature of these products. The extensive discussion on renewing the management agreement suggests a regular review process evaluating the advisor's performance and fees. Overall, these filings paint a picture of a company operating in a niche, but popular segment of the ETF market, offering specialized products with amplified risks and rewards. Investors interested in these funds need to be acutely aware of the daily rebalancing implications and potential for significant dispersion between daily and longer terms. The large negative positions in reverse repurchase agreements across several funds are also notable, indicating a strategy to manage collateral and leverage. That is our breakdown of the Volatility Shares Trust's latest SEC filing. What do you think about these leveraged and inverse ETFs? Do you find these reports helpful for your investment decisions? Let us know in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out, and subscribe for more breakdowns like this. Also, remember to check out our Discord channel for more in-depth discussions. Thanks for watching, and we'll see you in the next video.